From Wednesday through to Friday, Cardano's ADA pushed up 11.72%. Since yesterday, though, we have seen a major move to the downside here, dropping by 8.38%, led by BTC, led by kind of just how thin the liquidity is in the market. Am I concerned about these things? No, but I'm going to be going through the latest technical analysis with you to show you why I am not concerned about what is going on with this price action for ADA. So as I get into this video, smash that like button for me, guys. Really appreciate that. Subscribe if you're new, and let's get into it. So for Cardano here, we have had a bit of a major downturn in the market, but I'm not concerned about this because there's a lot of overlap in our price action. If I take this to a 5-minute time frame here, you can see, let me just show you, right? We have this move here, move down, move up, move down, move up, right? And so within this just little area right here, you can see that this created an overlap here. Now that overlap in itself tells us that this is a short-term move, not a long-term move, okay? And we can see you have 3 waves coming down, we have the 3-wave move coming up with that overlap, okay? So straight away from just the price action side, we know that this wasn't a major area for concern. Then we started to move on down, we have this one, and then this one here, right? So we drop down, we bounce up. Now the bounce to the upside creates overlap with this candlesticks over here as well. So yes, this is an area of support turning to resistance, which again we can see if I pull over here into this kind of range, you can see, right, resistance. But the overlap tells us that this is not a trend to the downside. Okay, again, you move down, we bounce up. There's no overlap with this one. We move back down, we then create overlap here. Okay, we move down, we create more overlap over here. Okay, so from a price action standpoint, we already know that this isn't a major issue. Bring this back to our 1-hour time frame. We can take a look that this is not a trend to the downside, but is a kind of short-term reaction in the market. Now, to the upside, we have less of that overlap, okay? So in here, we can see that this is a very interesting kind of structure. Now, we measure some of this based on our Fibonacci levels. We move this over to here. We can see that as we kind of pushed up here, we did cross higher than 1.236, okay? We led back down, and then we pushed back up into this final move. Now, this happens to be in the kind of W, X, Y, X, and Z category, where you end up with a triple zigzag pattern. So, for example, this is actually a really poor example at the beginning, but you have your ABC here, then you have a more easier to kind of follow ABC kind of structure happening in here, and then you have an additional one here, like so. This then gets marked up as a W, X, Y, X, and Z pattern, okay? Again, it's a corrective pattern, so we're not trending to the upside either. Okay, it's very important to understand that. Now we do have, to all those traders who don't follow things like Elliott wave, we have lower highs here on our chart. We do of course have a bit of an interesting kind of triangular wedge-shaped pattern potentially forming. We did have some lower lows coming in over here though, so we want to kind of keep that in mind. But if we ignore this one and we start thinking about, this is why I don't like trend lines, by the way, guys. You can see this kind of forming out as a potential continuation-based pattern. Either way, it doesn't really matter, but as you can kind of see, you have the triangular wedge pattern, or you have basically a channel pattern. Ultimately, it doesn't matter because they're both continuation patterns. So what I mean by this is that our trend is still overarching this this trend move to the upside here, right? That's our trend move. And then you have your continuation pattern, which is this one here, which is a rather boring part in the market. And then you get the breakout situation afterwards. Okay, which is why a lot of people are still speculating about the idea of 85 cents, right? A lot of people are still talking about that, and for good reason. Okay, so on our 1-hour time frame here, you can see that we had this low range kind of scoped out from a while back. We've already tapped into it a couple of times now, basically 75 to 70 cents. And then from here, we have the higher range that we've kind of tapped into yesterday, which basically was 80 to 82 cents, which actually sits a little bit higher on this 80 to 85 cent range up here as well. So we're looking for a clean break from here. I just don't think it's going to happen just yet. So we're going to keep a close eye on it. So let's go ahead and take a look at momentum, right? Our hourly stochastic RSI is approaching this overbought area. So I expect to see some volatility over the weekend. I don't think we're going to be avoiding that. From our relative strength index, obviously we saw bearish divergence and we dropped down significantly on that. For anyone who is watching this, that came in basically on this closed candle. Okay, so we saw bearish divergence on this closed candle here at 1300 hours. We should have been going short here on the 1400 hours if you're following that indicator. Okay, so we have that as also an area. Now it's in bearish territory as well, so we're not concerned there. The MACD histogram printed deeper kind of MACD depths here most recently. It is lower than what we saw previously, whilst having a higher low. So we have higher lows here on the price action, but we have lower lows on the histogram. Okay, this is bearish divergence. It shows that there's more potential moves to the downside, and I do agree with that. I think that we are going to be looking at coming down into this lower range, looking for the 72 cents, if not lower. Okay, rejection potentially from a 200 exponential moving average. I'll draw this in approximately to give you a rough idea. And of course, if I do trade any of this, it's going to be put down into the Discord server. 70 cents to 72 cents, I think, is where we're going to be looking to aim on a short position for ADA. And the MACD histogram shows us this. On the 1 hour time frame, you can see that there's a lot of distribution going on here, lots of panic in the market. But again, this is 1 hour time frame stuff. It doesn't actually reflect the bigger picture. So just note that on the smaller time frames, you can see that there is in fact a little bit of distribution going on as weak hands are getting shaken out of the market. Again, I'm not surprised. Okay, so as we take a look at this, I expect a bit of a volatile weekend. I'm looking for the lows, and then I think into next week we might see a little lift to the upside. We'll see how the daily chart looks as we get into that. So on that note, let's roll this into a 4 hour time frame, because the 4 hour time frame is an interesting one. You can see that we're lower than the 4 hour 200 EMA. Our stochastic RSI is looking for upward momentum shifting, but I don't think it's going to happen right away. So as we kind of think about this movement, what do we see? Well, we can see 3 waves coming down. We know there's a corrective move to the upside. The expectation that I would have is that our overarching structure here is for an additional move to the downside, looking for 70 to 72 cents. And I think we're going to see that wobble in the market. I don't know when exactly, because I can't time the market like that, but that's going to be what I'm looking for. And if I were to be trading something like this, of course, I would just going to use an example here. Market entry, stop loss higher than 200 EMA. And down into that kind of 70 cent range. The risk reward ratio isn't there, so we do need to get a better entry. So maybe it'll be a little bit higher around the 50 EMA, 50 SMAs, possibly lower this down if we can to a tad. Ultimately, we need to get into a risk reward ratio of 1.5 or more. So you can see something to that effect would potentially work. Okay, so again, shorting is the way that this is likely to go, in my opinion. It's still possible that maybe we go for the 200 EMA here, but I don't think that's likely to be the case right at this moment in time. Okay, so ultimately that's kind of where we're looking. Roll this up into a daily time frame, and our daily time frame is looking for a bit of a market pull to the downside. We are overbought. Now we can be up here for a while, that's not a problem, but I am thinking that we are going to see a bigger move to the downside just to get rid of any potential long positions and also correct the stochastic RSI. Now that doesn't have to be a huge move in the market. It just has to be enough to basically show that there's a lack of selling pressure whilst we move down. Until we see that, this stochastic RSI is going to remain quite high, and that's going to be a bearish indicator. Now, from the relative strength index, we are still lower than 50 as well. So until we can get a close position above 50, unfortunately, we are still in bearish territory there. MACD histogram is showing weakness within the buying side and the selling side. So again, this is a pent-up momentum that is going to see a significant breakout in the next kind of several kind of weeks, I would have thought, as we kind of look to see this kind of one breakout to the upside, which is what we saw back in November. So this setup is pretty much very similar to what we were talking about in November. And I think ultimately our kind of dollar cost averaging territory has to happen anything lower than 73 cents, in my humble opinion. If the price drops down lower than 73 cents, it's a buying opportunity, in the same way that I was articulating this when we were down at the 40-cent ranges. Anything lower than 42 cents was the buying opportunity, and the time before that was anything lower than 30 cents was the buying opportunity, right? So we have a pretty clear and well-defined range for accumulation, which is in line with the accumulation line. which is insanely high on the daily time frame. It's fluctuating on the smaller time frames, but you can see here that accumulation is the aim of the game for Cardano in these ranges. And for me, anything lower than that 200 exponential moving average on the daily time frame is going to be the buying opportunity. Now, of course, I'm not going to split hairs. We are currently sat at the point of recording at 76 cents. Dollar cost averaging territory, nonetheless, in my humble opinion. Maximum value lower than 73, but I think, 76 isn't a bad price either. Of course, we are looking at long-term targets overall. We are, of course, targeting out new all-time highs, and we are looking between $4.65 and $10. But ultimately, our kind of main area of optimism comes in here on the 1.618 at $9.25.5. That there is going to be my long-term goal and aspiration for Cardano. So it'll be very interesting to see how that plays out. It's a multi-year target, of course. It can take a very long time to get there, but the target remains very much set as per the structures that I have been mapping out. And so there you have it, guys. That's my technical analysis for today on Cardano. I do think there's going to be some volatility, some great trading opportunities, which I'll try to put down in the profit pit of our Discord server. If you're not familiar, the profit pit is an area of our Discord which you can gain access to if you have signed up with one of the affiliate links of the exchanges and you're actively trading on those. So if you go to the description of the video, you'll find exchange links for like BitGet, Blowfin, Bybit, Mexi, etc. If you are actively trading on those platforms via our affiliate links, then you can gain access to the profit pit, which is where I put in my entry points, my stop losses, my targets, my leverage, the percentage risk, the risk reward ratio, all of the details that you need to know about the trades that I am actively taking. They differ quite a bit from these videos because these videos are recorded ahead of time. By the time I do all the editing, etc., prices change. So by the time I actually get around to entering my own trades, the prices are different and I have different takes, different perspectives and so forth. So if you're actively trading using one of those affiliate links, it's well worth joining the free Discord that's linked in the description down below and joining the profit pit where we document all of those pieces of information because it can be very, very insightful for your own analysis. Of course, it's just what I'm doing. It's my own thoughts and opinions of what I'm doing in the charts and in the data. Obviously, I'm no financial advisor. I can't give financial advice. All I can do is show you what I am personally doing. Now, if you found this useful and informative, smash the like button, subscribe if you're new. And if you haven't done so, guys, you're going to want to check out this video right here because it showcases how Cardano could be set to flip both Dogecoin and USDC.